Alibaba is one of the largest companies in China, and they make the bulk of their money from Chinese retail. Now, I'm going to be talking about an investment I recently made in Alibaba and the results, and I'll be showing the whole process of what I went through. So again, Alibaba is one of the big dogs in China that majors in Chinese e-commerce. They make the bulk of their money here, and while they do have other business segments, this is where they make the most of their money. So here we go. I'm gonna hop in the computer and show you guys what went down. All right, before we get into how this all went down, I just wanted to go over what my current investment approach is. So right now I'm using 1 fundamental analysis and 2 technical analysis. What I am doing is I am looking for companies that are intrinsically undervalued, and then I'm using technical indicators to determine when to get in and when to get out. So really this is a combination of 2 different books. So I've got one, the Dhandho Investor by Monish Purbai. And with this book, I am basically using the discounted cash flow valuation method, which he goes over. And I am also using the second one, Rule Number 1 by Phil Town. And you can see I've got a boatload of notes in this bad boy. So what I'm really using in here is the understanding of basically how the stock market works and how prices move, which is it's a little obvious once you go over it, but I feel like it didn't really click for me until I read this book. So one of the big things he talks about is how the market moves because money moves, which is a little obvious because supply and demand. But what he really focuses on as an edge that individual investors have is being able to use the tools. Now, the tools are technical indicators that tell us where the big money is moving. He talks about big money and people who manage mutual funds and hedge funds as being like these massive cruise ships that are very slow to maneuver, and they basically move the market and tell the market what direction it's going to be going. Whereas he compares us, the little guys, individual investors, as being like these little wave runners. We can hop in and out and we don't affect the market, and we're basically invisible compared to these big guys, and that could be a big benefit to us. So just want to share that real quick. And again, Monish Purbai's Dhandho Investor and Phil Town's Rule Number 1. If you guys want to check them out, they're great reads, highly recommend it, and I'll have these linked in the description down below. All right, back to how it went. All right, so right here you can see my purchase date of Alibaba. I bought these shares on the 22nd of March, actually, even though it shows the 24th. This is just because the settlement date has a 2-day lag to when you buy the shares. You can see that I bought a little over $10,000 worth, about 120 shares, and the price was $84.83. And then I scroll down here and you can see that I sold Alibaba on the 14th of April. Really, it was the 12th, but again, settlement date. And that amount was for almost $11,500, and that price was $95.12. Again, 120 shares. This ended up being about a 12% return, a little more, a little over a $1,200 profit, and this was just in a few weeks, and I was pretty happy with these results. So how this went down is, first off, again, as I talked about, I look for intrinsically undervalued companies, and then I use technical indicators to get in and to get out. So right here, if you've seen previous videos of mine, this will look familiar. It is my discounted cash flow valuation template. So we got our data from Yahoo Finance and Macro Trends, and we came up with an intrinsic value of $349 billion. Now, recently I checked the market cap and it was $248 billion, which implies that we have a margin of safety of about 29%, and that this business is currently undervalued, again, about 29%. So there's the first part of it with fundamental analysis and having it be intrinsically undervalued, which is positive, we like that. And then I hopped over to Alibaba on Yahoo Finance, and then I used the tools to see when to get in, when to get out, as I talked about before. So again, this is from Phil Town's Rule Number 1. We've got 3 different indicators that we're using. We've got the 10-day moving average, we have the moving average convergence divergence, or MACD, and we've got that set to the 817.9, and then we have the 14-day stochastics. So with these 3 tools, we get in when our line that we're following crosses through the indicator line. So in the moving average, we've got our stock ticker, BABA on the side, that's just the stock price. When the stock price passes through and crosses up through the moving average, that is the signal to buy from that indicator, but you have to wait until the other ones cross up as well. The MACD, when that one crosses through that's also an indication to get in. And then with stochastics, the buy line, which is the one we're following, crosses up through the sell line, which is the black one in this case. That is our indicator to get in as well. So you can see, looking back through Alibaba from, let's just look at February 23rd. Going through, we've got a little variation in stochastic, but the other two have not crossed through. So just looking at the moving average, our stock, Alibaba in this case, does not cross up through the moving average until, I can't see it at the moment, until the 21st. And then at that point, the MACD and the stochastic have also crossed up through the indicators. And I believe I saw this at the end of the day, and all these were saying get in. So that next day on the 22nd, I bought 120 shares of Alibaba. Crossed through, that means get in, according to Phil Town and his indicators. And right there, just on this screen, it shows 83 and 65 cents. Scroll back down here, bought in at 84.84 roughly. So somewhere in there. And then it was officially settled on the 24th. So again, going from the 21st is when everything crossed up. That was my indication to get in. I got in. And then later on down the road, the line crossed down. All three of them had crossed down by the 11th. So that next day, okay. Actually, the MACD hadn't, but by the 12th, they had all passed down. And then at that point, they all crossed down, means get out. That's when I sold. So we can see this price shows 93.84, and mine was 95. So again, how I have it set right now, these, at least the moving average is set to the closing price. That's why there's some variations, but obviously price doesn't stay the same during one day, so mine won't match up exactly with this chart. But anyway, that's how it went down. Got in, got out, had a little over 12% return, about $1,200, and everything is heading south right now. Means big money is selling out. I know I recently saw that, what was it, SoftBank, I believe, is selling a lot of their Chinese shares, and they're a big investor, so that's heading things downwards. But also during this investment, something to note, which was just kind of coincidental and kind of lucky on my behalf, is I bought in, again, undervalued, tool said get in, I got in, but then Alibaba announced that they were going to be separating into 6 different businesses with the potential to IPO in each separate business. And of course, investors love that. That could unlock a lot of shareholder value, as Alibaba has been pretty undervalued for quite some time. So the stock kind of went a little bananas, and I was happy to be along for the ride, and that's how it happened. So hopefully you guys got value from this video. And if you have anything you would like covered, and maybe any certain topics you would like discussed, I am here to help you, and I would love to help in any way that I can. So hopefully you guys got value. Make sure to hit like and subscribe, and follow along for more. See you guys next time. Bye.